winding up the first month of 2020 already. It's flown by. For me anyway. Maybe it hasn't for you. It's flown by for me. So anyway, we're back. We're here this morning to do just a quick look at the markets. We'll start with the futures market. We'll head over to Forex, crypto, and then wrap it up. As you know, this week, really since better part of last week, we've been seeing some ripples through the market as part of the coronavirus, the virus that started out in Wuhan, China. And we mentioned yesterday, I felt like it was a little bit of fear in the marketplace driving some things. Definitely some reactiveness to something that may, who knows where it's going to go, right? But initially there seems to just be a lot of fear in the markets, driven by fear, driven by the media, which, it is what it is. We'll see how it plays out. But again, looks like today, seeing a little bit of recovery over here from some of the initial dips. Big move on Friday, gap down. Yesterday, we were talking about this 3244, 3245 area. It seems to be the low. It's been repelling off of that pretty consistently now. It's recovered a little bit up to 3260. Who knows where it'll go? Obviously, with that big move and that gap down on the 4 hour, we've changed over to what could be a downward trend. I really think it's going to pull back a little bit more and pull back up to this 3290, maybe even 3300 area. Over the near future. Who knows when that'll happen, or even if it'll happen. We can only just trade what's on the charts. So, but right now, because we have flipped over the trend on a 4 hour, I'd be looking to sell the rallies on here. So if it pushes back up, like right now, this 3262, 3263 area has been seeing resistance. It's been pushing up, hitting its head here on this area as resistance. So, right now, looks like this is a great area to sell off of. This 3260, 3262, 63. It's an area, right? There's not any, pick a number, let that be your line in the sand. But that seems to be the spot to sell rallies. If it pushes through that, definitely this 3290, 3285, 3290 would be the next spot to sell if it can close this gap, which it very well may over the course of the week, barring any new news, right? There's obviously new cases being reported daily, and it's still very early to know what the real impact of this is, right? Right now, like I said yesterday, if you look at it and you look at mortality rates of this versus other things that have occurred in the past, it's not tremendous, and it's also been caught early, so who knows, who knows what'll really go. The big thing is just trade the levels. Don't try to guess or read too much into things. I think the big thing here is to know that while I'm trying not to go too much down a rabbit hole of future speculating, but the reality is, markets are really, that we've been pushing up for years now. And like I've said before, people have been saying how much higher can it go since it cracked 2,000 on the S&P, right? How much higher can it go? Well, a lot higher. Can it still keep moving up? Yeah, it absolutely could. There's going to be at some point something that does change that direction, and we're going to see a fall. When? Who knows? Why? Who knows? It could be this is the catalyst that leads to underperforming. I haven't had my coffee yet, so I don't think all my words are coming through the way they want to be. But this could be the catalyst that leads to other poor reports, right? We have maybe earnings are down in other areas, which drives another little churn down in the marketplace, which then drives another churn in another sector down in the marketplace, and that might be the catalyst that leads to that push down over the long term. But again, when's it going to happen? How's it going to happen? We don't really know. So this is where I always talk about don't let your biases, we all have personal biases, don't let your biases get too much in the way of actually, if you're a day trader, of actually trading what you see on the charts. But you can only trade what we see in the charts. And in order to do that, we've got levels here in futures anyway. For me, I find levels that I'm willing to trade from. And then I look to trade those levels. And I watch what's happening in the marketplace. And again, right now, here on the 4 hour, we are in a downward trend. So, looking to sell those rallies is certainly a great way to go. For me, this 3262, 3263 area, great spot to sell off of. Unless it breaks above that. I mean, right now, we've still got another hour before the U.S. session's really fully underway here. This is still off hours trading. If it cracks this, if it cracks 3260 and closes above, prior to the start of the U.S. session, then at that point it's broken a key resistance area and it becomes support, and I'd look to buy off of that. But we need to make those plays on a 30-minute. As they come up. Right now, though, on the 4 hour, the trend is down, and right now it still is looking like a great opportunity to sell into these rallies back up. So that's my plan, is just to keep selling these rallies unless something different changes. But again, even on the 30-minute, we are still in a downward trend here. We're in a bit of a channel, but we're still in a downward trend. Now, the channel is interesting too. This comes back to what we talked about the other day. Another way to approach it, because it is hard if you've got a big green candle. We've been for years now in a market that's trending up. Now you've suddenly had a little bit of a pullback. We've got a big green candle, and we're saying sell off of that. It's hard to do, right? Because it's counter to what's actually happening, and our brains have trouble buying into that. So the flip side of this, looking at a 30-minute here, if we look at the last, since Monday, right, since yesterday, we're in a channel between 3263 and the bottoms around 3245, right? You could look at that and say, okay, we're in this channel, and I'm going to buy a break higher, and I'm going to sell a break lower, and just have to be patient and wait for that to set up. So that's another way to look at it. But for me personally, I'm watching this level. I'll see what happens, over the next hour, and then once the U.S. session opens, we'll see what's happening here and if it's still viable to keep selling these rallies on that. Over here, and I guess I was looking away from the screen talking about what was happening over here. Oil. Same deal. We're in a downward trend. We've been pushing lower. Of course, we have now come down to a level that we really haven't seen since last year, which, granted, it's January, right? So looking back into October, November, if this thing will retrieve the data. I don't know why it's been so slow at retrieving data lately. There it is. Actually, even further back than that. It's like October areas where we were seeing this level previously. So obviously, the current trend is down, but if you're looking to be a counter trend trader, saying, okay, well, maybe we've kind of hit that bottom, certainly wouldn't hurt to look to buy off of this bottom edge down here. But the preferred method, if you're trading with the trend, would be to wait, be patient, let it pull back to some key areas, like this 54 and a half, and look to sell off of those pullbacks. But certainly, if you're looking for more intraday activity, certainly, down here on a 30-minute, just watching this to see, and buying off of those bottom edges. But again, even on the 30-minute, we're still in a downward trend. So, it comes back to how you really want to approach that market, utilizing different trading strategies or whatever trading strategy you're comfortable in exercising. Same thing applies here. If you don't want to worry too much about the trend and you want to just simply look at channels, you could look and say, okay, we've got a channel here between 53 and a half and 52 and a half, where we've kind of got a little channel right here, And if you just simply want to be patient and look for breakouts, look for it to break above that and buy that break above 53.5, and then look to the bottom side and sell 52.5 if it breaks below it. There are so many ways to approach the market. They don't have to be complicated. We don't have to worry too much about trying to figure out why. As humans, I think we always want to figure out why. Why is this happening? Why is this going on? And then we try to make trading decisions around it. It can be unnerving because every situation is totally different. And it's really easy in hindsight to identify the why, but it's not easy to do that with some foresight, right? Looking at the future. So it's better, in my mind, just to simply find a trading plan that's got a simple plan, that's got a simple strategy behind it, something you can execute consistently time after time. Be willing to take the loss because you're going to be wrong. You're absolutely going to be wrong about direction. It's going to happen. That's fact of life. We can't predict the future, so we're going to be wrong at some point. So have a strategy that allows you to take a loss, but then also allows you to have a profit point that's at least 1 to 1, 1.5. I'd say 1.5 to 2 to 1, versus your initial risk, and let that go. Utilize some things that do give you an edge. Look at the current trend of the market. Look at those things, like I said. Look at your levels of where things have been trading for an extended period, and watch for it to break out of those. Those are great trading methods that don't require a whole lot of thought, which in the end, I hate to tell you, doesn't really matter. I know people argue that with me all day, but if you really step back and think about it logically, you can do every bit of analysis and you want to about what's happening and why it's happening and why this should happen and that should happen. But the reality is, when you push the dang button, it's either going to go up or down, and you don't really know. The future is untold, right? So anyway, that's my soapbox for right now. Over here, talking about currencies, they're consolidating right now. Everything's kind of in a consolidation mode. Really, typically won't see activity until we get to the 9 o'clock, 9:30 Eastern time frame here in the U.S. before we'll potentially see some additional activity there. We do have some news coming up today. At 10, we've got consumer confidence, which could certainly be a catalyst in the marketplace for us. So we'll see what happens there. But for right now, over here on the currency market, things are consolidating. I don't really expect to see much, at least for the next 20 minutes. And then 9 o'clock into the 9:30 when the U.S. stock market opens, we may see some additional activity here. And at that point, we'll watch and see where we have the ability to potentially pair a couple of currencies together and find some activity that gives us that potential for profit. So just this one, I don't have a way to set up trades in advance on the currency market because I'm looking intraday for the currencies that are actually moving and then make that trading decision from there. So we're waiting on that. From a crypto standpoint, we've been talking about Ethereum and Bitcoin. Yesterday, we mentioned that we were hanging around here at this 167 area. It was a great spot. It's been trading around this area quite a bit, right? And then finally it broken above, and it became a really good support area to buy off of, looking to buy that uptrend. We talked about 173 being the next potential stop. It did. It came to that next resistance point up here, and it's just been bouncing around. So at this point, we are still on an upward trend, but we'd rather buy the pullback. So if it can pull back to this 170, great spot to buy off of. The flip side of that is, if you don't want to buy pullbacks, waiting for it to break through this 173 area and buying that as a breakout. And same thing down here at the bottom edge. If we break through weaker again through this 167, that could certainly be a spot to sell off of. And same with Bitcoin. We were watching this 8,600. It finally bounced off of that, and it's really been pushing on quite a bit. And we've come back up to 9,100 now, which seems to be the current top. So again, looking at opportunity there, right now it is still an upward trend. So, look to sell, or I'm sorry, look to buy the pullback. So right now, pullbacks to 8,900, great spot to be able to buy off of. Otherwise, the flip side of that is setting up, some support and resistance areas over here, and then looking at your potential breakout opportunities to either buy or sell on a breakout of that. But if you're trading with the trend, then you'd want to be patient, wait for it to pull back, and then be able to buy with that. Or, if you're looking at channels, if you're trading with the trend, you'd want to be breaking out to the long side for your buying opportunity there. So that's what we're looking at. Over here, I've been monitoring, like I said, this is just a beta test I'm involved in, but still pushing on. We've, day over day, additional gains. Still for the month, we're up, I haven't done the math. Oh, well, my phone's recording this, so that's where I would do my math. It's probably like 11.5% at this point is where we are on that. So first full actual month traded in my Binance account, still doing exactly what it had shown to be doing over the past 6 or 7 months of live testing before it was made public as a beta. And I say public to just a finite group of people that are helping out with my buddies' kind of inner circle. So we'll see where that goes. Again, when it is ready to be released, I'll let you guys know and let you know how to get a hold of that if you're interested. It's for me, nice little passive investment because it's being managed, and I don't really have to do much other than just make sure it's doing what it says it's going to do and keeping the losses at a reasonable level like it should be. So anyway, that's it. So back over to markets real quickly just to recap. In the futures market, there's still uncertainty with the virus thing, the virus news that's going on out there. Although the market does seem to be recovering a little bit today, there's still a lot of uncertainty. That could be the catalyst that drives other things down the road. And that might be the beginning of a fall. However, no one really knows. The trend is still up. I say the trend's up. Right now, over the last 3 days, because of Friday's big move on the S&P, that trend is down. So, at this point, we'd be looking to sell pullbacks until that does, if it changes again. So we'd currently still be looking to sell pullbacks on the ES. On crude, again, trend is down. We are at kind of a bottom that we haven't seen in months now. Trend is still down, so if it pulls back up, we'd be looking to sell off of that. However, if you're counter trend, and you have to be patient to wait for it to pull back up. You have to be patient to wait for it to pull back before you can sell it again, right? So if you are a counter trend trader, looking at that bottom edge is a great spot to be right now. Looking at that bottom edge for potential longs. Just like anything else, keep your stop losses kind of tight and manage your risk appropriately. You've got to manage risk appropriately. Gold, I didn't talk about gold. We're kind of hanging at this 1575 area right now. Gold is still on an upward trend, and looking to buy pullbacks is what I'm watching, and it's the most effective way to trade with that trend. So we'll see where it goes there. Currency markets consolidating right now. I'm waiting until the 9 o'clock hour into the 9:30 hour Eastern time to see if we start finding some divergence and finding a couple currencies we can pair together for that. So I think that's everything. We've hit it all. So there you go. I do have one more lesson coming out today into the members area regarding Forex, and I have some tools in MT5 and MT4 that need to be put online for you. So we'll be getting those out here the next day or so as well. All right, so that's it for now. Have a great day.